Welcome to Zydus Lifesciences Ltd. Q4 FY24 earnings conference call. Please note that all participants' line will be in listen-only mode, and there will be an opportunity for you to ask questions after the opening remarks. Please note that this conference is being recorded. I now hand the conference over to Mr. Ganesh Nayak, Executive Director of Zydus Lifesciences. Thank you, and over to you, sir.
Good evening, ladies and gentlemen. Welcome to our post-results teleconference for the fourth quarter and the financial year ended March 31, 2024. For today's call, we have with us Dr. Sharvil Patel, Managing Director, Mr. Nitin Parekh, Chief Financial Officer, Mr. Arvind Bothra, Senior Vice President, Investor Relations, and Mr. Alok Garg, Senior Vice President from the Managing Director's Office. To begin with, let me give you an overview of the performance for the year. During the fiscal 2024, all our key businesses demonstrated strong performance through the year. Overall, we delivered healthy double-digit growth during the year in line with our expectations, along with improved profitability. I'm happy to inform you that we achieved the highest ever operating profit and margins during the year. Our branded formulations business in India grew faster than the market and registered double-digit growth during the year, aided by healthy volume growth and new product launches. On the consumer wellness front, the FMCG sector witnessed gradual improvement in demand during the quarter, with an uptick in demand also in rural India. Most of our portfolio has seen demand recovery, which was further fueled by the demand of summer-led brands like Glucon-D and Nycil in anticipation of a good summer. We achieved an important milestone in our US formulations business during the year. Revenues of the business crossed $1 billion for the first time on the back of strong double-digit growth. The base business achieved sequential growth every quarter through the year on the back of volume expansion and new product introductions. International markets business, which comprises of emerging markets and Europe, also delivered double-digit growth, with all key markets contributing to growth during the year. In order to stay competitive and serve our customers in a cost-efficient manner, we continuously analyze the spend base and identify and implement various ideas across functions to improve efficiencies in our operations. We could improve our profitability in the range of 50 to 70 basis points in the past on account of such initiatives, and we expect similar improvement going forward as well. On the back of our diversified portfolio of products and focused execution efforts, we expect all our businesses to sustain healthy growth. With that, let me take you through the financial numbers for the year gone by. We recorded consolidated revenues of 195.5 billion rupees, up 13% on a year-on-year basis. The business delivered robust operating performance with an EBITDA margin of 27.5%, which is an improvement of 510 basis points over the previous year. Consequently, the consolidated EBITDA for the year grew by 40% to 53.8 billion rupees. Net profit for the year stood at 38.6 billion rupees, up 97%. Our balance sheet strengthened further with a net cash position of 8.6 billion rupees as at 31st March 2024 against the net cash of 5.5 billion rupees as at 31st March 2023. Coming to our quarterly performance, we ended the fiscal 2024 with a robust performance. The revenue stood at 55.3 billion rupees during the quarter, up 10% on a year-on-year and 23% on a quarter-on-quarter basis. We registered the highest ever operating profitability during the quarter with an EBITDA margin of 29.5%, which is an improvement of 440 basis points on a year-on-year and 500 basis points on a quarter-on-quarter basis. EBITDA for the quarter stood at 16.3 billion rupees, up 30% on a year-on-year and 48% on a sequential basis. Net profit for the quarter was 11.8 billion rupees, up 299% on a year-on-year and 50% on a sequential basis. Now let me take you through the operating highlights for the fourth quarter of FY24 for our key business segments. Our India geography, which comprises of formulations and consumer wellness business, accounted for 40% of the total revenues during the quarter and grew 8% year-on-year. Our branded formulations business in India grew faster than the market during the quarter as well, with 8% year-on-year growth. Portfolio of key pillar brands and innovation products were the key growth drivers. During the quarter, we gained market share in derma and the anti-infective therapies. On the super specialty front, we retained leadership position in the nephrology segment, while in the oncology space, we remained amongst the fastest growing companies in India. Contribution of the chronic portfolio has increased consistently over the years and stood at 41.2% as per IQVIA MAT March 24, an improvement of 360 basis points over the last 3 years. The consumer wellness business recorded revenues of 7.8 billion rupees, up 10% on a year-on-year basis. The personal care segment, which comprises of Nycil and the Everyuth brands, registered yet another quarter of strong growth. Performance of the food and nutrition segment improved with mid-single-digit growth during the quarter. We continued to witness gross margin expansion with an improvement of 377 basis points on a year-on-year basis for the quarter, driven by calibrated price increase taken earlier and efficient hedging strategy for key commodities. Now let me take you through the performance of our US formulations business. The business accounted for 47% of the consolidated revenues during the quarter, with revenues of 25.2 billion rupees and delivered robust 37% growth sequentially. As mentioned earlier, the base business continued to expand sequentially during each quarter of the current fiscal on the back of volume expansion and new product launches. We launched 5 new products and received approval for 12 ANDAs, including 4 tentative approvals during the quarter. We filed 20 ANDAs, received approval for 46 new products, including 5 tentative approvals, and launched 29 new products during the year. On the international markets front, growth momentum built over the last several quarters continued as the business delivered double-digit growth for yet another quarter with a healthy demand across key markets. Overall, the business posted revenues of 5 billion rupees, up 13% year-on-year. During the quarter, we received the EIR from the US FDA for our API facility, which was inspected by the agency during the preceding quarter. 2 of our injectable manufacturing facilities located at Ahmedabad, SEZ and Jarod near Vadodara were recently inspected by the US FDA and were issued certain observations upon completion of inspection. We are closely working with the US FDA to implement necessary corrective actions. This concludes the business review. I would now request Dr. Sharvil Patel to take you through the key drivers across businesses as well as initiatives in our innovation program.
Thank you, Mr. Nayak, and good evening, ladies and gentlemen. It is a pleasure to have you all here on the call today. We are pleased with our performance during the quarter and the year. All our key businesses are focused on enhancing the value proposition to their customers by fulfilling their diverse healthcare needs. We look forward to expanding our presence in existing therapies and markets and explore newer avenues to serve our customers better and generate greater value for all the stakeholders. On the India formulations front, we continue to channelize our efforts and resources towards strengthening our position in focused therapy areas through multiple levers. Our innovation engine continues to offer novel solutions to our customers and satisfy their unmet healthcare needs. Various strategic interventions done in the past have helped our branded formulations business to deliver double-digit growth over the last couple of years, and we look forward to building onto this momentum. On the US formulations front, we have built a comprehensive portfolio spread across dosage forms by leveraging our in-house development capabilities, as well as exploring partnership opportunities. In the specialty space, acquisition of LiqMeds has augmented our capabilities to deliver novel solutions to the patients, while in the rare disease space, we have now a meaningful presence with 2 commercialized products and 1 product under filing stage. We expect our US business to sustain the growth trajectory going forward. This will be driven by large product portfolio, strong customer relationships, a network of regulatory compliant manufacturing facilities, an agile supply chain, and an efficient cost management. On the international markets front, we are focusing on growing the business in chosen therapies areas across key geographies by leveraging our global R&D portfolio of differentiated and niche generics as well as specialty products. In Europe, we are working towards strengthening our retail presence in France and Spain through portfolio expansion, improving cost proposition, and increasing pharmacy coverage. We also commenced our UK operations during the year, where we wish to expand by leveraging our global R&D portfolio. Our innovation pipeline across different areas progressed well and achieved important milestones during the year. Success of our innovation efforts is evident from the increase in number of patients over the years who benefited from the affordable and accessible treatments options delivered by our innovation engine to fulfill their unmet healthcare needs. With this, let me talk about some of the material developments on the innovation efforts during the quarter. On the NCE front, we completed the recruitment of patients for phase 2b/3 clinical trials for saroglitazar magnesium for PBC indication for the US market. The trial will study the effects of a molecule relative to placebo over 52 weeks across 100 sites. The phase 2b clinical trial of saroglitazar magnesium for NASH indication for the US market is advancing as per the plans. Recently, the National Medical Products Administration of China accepted the new drug application of desidustat made by China Medical Systems Holdings Limited, CMS. Earlier in 2020, we granted an exclusive license for desidustat to CMS for China, Hong Kong, Macau, and Taiwan markets. Phase 3 clinical trials in China have demonstrated positive results. The primary endpoint of the hemoglobin mean change from baseline to the period of week 7 to 9 has indicated that desidustat is more effective than placebo in increasing hemoglobin levels. Coming to a key development program, ZYIL1, the WHO's international non-proprietary name INN recently approved Usnoflast as the recommended name for the molecule. Usnoflast is under clinical development for 4 indications at present: amyotrophic lateral sclerosis, ALS, Parkinson's disease, cryopyrin-associated periodic syndromes, CAPS, and ulcerative colitis. For ALS indication, Usnoflast is undergoing phase 2 clinical trials. ALS affects approximately 31,000 people in the US, and on average 5,000 new patients are diagnosed every year with this disease in the US. Over 30,000 people are estimated to be living with ALS in Europe, while in India, approximately 75,000 people are living with ALS. People with ALS have a median survival of approximately 2 years from diagnosis. The US FDA granted the approval to initiate phase 2 clinical trial of Usnoflast in patients with Parkinson's disease. It is estimated that there are over 8.5 million people worldwide suffering from Parkinson's, with 1 million suffering from the disease in the US. Each year, 90,000 new cases of Parkinson's disease are reported in the US. On the CAPS front, we are the first company to establish phase 2 proof of concept for usnoflast in CAPS patients. Results of the study were published in the Clinical Pharmacology in Drug Development. Usnoflast holds an orphan drug designation from the US FDA for CAPS indication. We have initiated phase 2 proof of concept study of usnoflast patients with UC, ulcerative colitis. It is categorized by irregular chronic immune response that creates inflammation and ulcers in the mucosa of the large intestine or rectum. In the year 2023, the prevalence of ulcerative colitis was estimated to be 5 million cases worldwide. On the biotech R&D space, during the quarter, we initiated phase 3 clinical trials for one product. We completed preclinical tox study for one monoclonal antibody and submitted the report to RCGM. On the specialty 505(b)(2) development front, Sentinel Therapeutics, our wholly owned subsidiary, received marketing authorization from UK MHRA for Nulibry for the treatment of patients in Great Britain with molybdenum cofactor deficiency, MOCD type A, an ultra-rare life-threatening genetic disorder. It is the first and only treatment in Great Britain for patients with genetic disorder. An early access program is in place for Nulibry for enabling eligible patients who meet the specific criteria. Through this program, healthcare professionals can request for the product if it is not commercially available in their country. Recently, Sentinel Therapeutics Incorporated acquired world proprietary rights to Zokinvy from Eiger Biopharmaceuticals for the treatment of Hutchinson-Gilford progeria syndrome, an ultra-rare fatal genetic premature aging disease that accelerates mortality in young patients. Zokinvy is the first and only treatment approved by the US FDA for progeria. The product is also approved in EU, Great Britain, and Japan for the same indication. Thank you, and we can now start the Q&A. Over to the coordinator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may raise your hand from the participant tab on your screen. Participants are requested to use headphone or earphone while asking a question. The first question is from Kunal Dhamesha.
Hey, hi, good evening, and thank you for the opportunity and congratulations on good set of numbers. So can you highlight, what would be our broader outlook for FY25 in terms of revenue growth? And also, I think EBITDA margin earlier we had suggested that we'll do EBITDA margin north of 27%, but 27% is something we have done in FY24 itself. So do we expect to do higher EBITDA margin?
So we expect all our businesses to register good double-digit growths at the aggregate level, and we expect high teens growth. This is obviously after assuming competition in Asacol in FY25. On the EBITDA margins front, I think assuming we have competition in Asacol, we expect to comfortably maintain FY24 margins of 27.5% in the coming year. And we'll make our best efforts to continue to improve those margins. So yeah, those are the two main observations I have on this. And plus, I would say we still continue to have a robust pipeline of launches with 30 plus launches that we plan for FY25.
Sure. And in terms of R&D expenses, any outlook that we want to share now that we have enrolled patient for PBC trial? Does that mean that there would be a step jump in the R&D for FY25, or it would be more like business as usual?
I think with the revenue growths that we expect, and also there will be growth on R&D, I think we are still, giving guidance of around 7 to 8% for FY25.
Sure. And the last one, with your permission, sir, on the acquisition of Zokinvy, from here on, whatever that product is doing, what would be our strategy to grow that, revenue? Would it be more on getting, so is it that we are not able to reach, the drug has not reached all the patients that are available? And is it more like geographic, adding more geography in terms of launch and all? What would be the strategy with that product?
Yes, so I do think we believe that with our current capability that we have in the rare disease space, we believe that we will be able to find better ways of, I mean, we'll do better execution on finding new patients, first, obviously, in the US. But we also see the opportunity in other markets with the registrations and access programs being created for this to get more patients there. So we do definitely see an opportunity to grow this in FY25 and FY26.
Sure. I have more question. I'll join back the queue.
Thank you.
Thank you.
Thank you. The next question is from Neha.
Yeah, thanks for taking my question. Sir, on the US pipeline, if I were, based on your commentary that you would launch about 30 products, if I look at the pending pipeline that we have, it seems like it's around the 60 number. So should we assume, as we go ahead, the number of launches sort of moderate because we're doing more high value launches, or should we see the filing momentum materially pick up? What's the strategy to sort of augment this pipeline in the US?
So we still expect to file 25 to 30 plus ANDAs in FY25. This year we had filed 20, but we will see that uptake happen by at least 5 to 10 more. We are also actively pursuing partnership opportunities for in-licensing important products in the US. And recently we obviously announced one, but we are seeing success on that in terms of finding more opportunities. And going forward, as I said, we still hope to launch 35 plus products in the US in FY25. So I think from that point of view, we still will continue to have a robust pipeline of products that we have filed and to be filed. So I think we will still achieve 25 plus launches consistently. But obviously this year we'll see higher launches. I mean, coming year we'll see higher launches.
Got it. And, how many of these launches, a rough breakup of what you're planning in 25 would be injectable, non-injectable, and just trying to assess the risk given two of our facilities have been inspected. I know we don't know the outcome yet and you're doing your best, but, how much of this is injectable versus non-injectable? Any color there?
So currently we believe maybe four products that we may believe may get delayed. That's our current estimate.
Okay, got it. Second is on the India business. Now we've started seeing some momentum, pick up in the India business, particularly I'm talking about the formulation business, this year, particularly in the last few quarters. Should we assume that, the growth trajectory for India would be now at a higher level, or, what we saw last year is the momentum that we will maintain for the India business?
So as I said, we do expect double-digit growths, but definitely we will like to grow ahead of market depending on how the market shapes up in FY25. But currently, our expectation is to grow in double digits for the India business, which is mostly aided by obviously our proprietary and differentiated products, which are significantly value. And also with the efforts that have been put on in certain specialty and chronic segments, we will see better momentum for our growth booster brands that we have allocated. So I think that plus the proprietary and new differentiated products that we have, we believe we can deliver double-digit growth.
Understood. And sorry, one other question on the US market on Asacol. You said the guidance includes competition in Asacol. So you're assuming that there will be competition this year, first half, second half. I mean, do you have any color on that? Or, this is just being conservative?
Yeah, I think on the conservative side, it's always prudent to assume we will see competition. So that's what we always, when we're giving guidances, we're talking about guidances with competition on Asacol.
Understood. Thank you so much, sir.
Thank you. The next question is from Surya Patra.
Yeah, thanks for this opportunity, sir, and congrats for the strong set of numbers. Sir, my first question is on the margin improvement sequentially, what we have seen. If I just adjust for the, let's say, some Revlimid kind of number out of the total reported, it looks like that your base business has seen the gross margin, which is highest ever. And if this is the case, back to back, even third quarter gross margins were significantly better for the base business, adjusted for Revlimid. So what is driving this, or it is largely to do with the consumer business doing better than expected?
So yes, one part of the reason for the gross margins is we saw an improvement on the gross margins for the consumer business. But overall, also we have seen improvement in gross margins with better efficiencies and inflationary pressures reducing. So I think both of them have aided, and obviously it's also to do with product mix. As new product sales becomes a larger part of the overall business, the gross margin profiles are much better there. So I think all of that, so product mix, the wellness business seeing the inflationary pressures ease and better pricing realization, and obviously the mix of markets that we have has led to that benefit of improved gross margins.
So in that case, so what is the sustainable, means whether this is a sustainable one or we can grow upon this, that is one. And secondly, the spike in the other expenses also what we are witnessing in this quarter, is it also largely led by the consumer business contributing significantly?
So gross margin without special products is sustainable, and with continuous efforts in terms of cost rationalization, normal price increases that we can take in consumer business, we are able to take care of any inflation in terms of input cost. So far as other expenses are concerned, for the quarter, the increase is partly because of one-off expenses to the extent of about 50 crores, and largely because of the seasonality of business of consumer wellness.
Okay. This 50 is one-off.
Yes.
And what this is relating to what, sir?
So there are different items.
Okay. My second question is about the US business. So obviously we have seen a kind of a strong sequential improvement, obviously also led by special products. But on the base business front, how should one think about, and while you were talking about sustaining the momentum there in the US market as well and all that. So what is the nature of the products, or means while you are saying 30 odd products pipeline for this year, any special products or any kind of a key product opportunities that you are targeting, if you can highlight selective few, which will give some confidence about the sustenance of the double-digit kind of performance in the US business?
So I think there are a couple of things. One is obviously the new launches will scale up, as I had spoken of. So both the new launches that we'll do and the last year's launches that are scaling up, including the products like in the transdermal space. The liquids specialty US business also is scaling up meaningfully. There is also good contribution that will come in from the animal health business, as well as the recent acquisition on Zokinvy, which will start getting realized in a quarter from now. And if you say very meaningfully recent, obviously we have launched Mirabegron, which is obviously a very significant launch by the company.
And we have exclusivity or kind of thing in both the strengths for Mirabegron?
Yes, from our best knowledge right now, on one strength we have one more competitor, and on the larger strength we are exclusive for now.
Okay. And sir, a third question was about, let's say, sorry, it is the continuation to the Revlimid point. So is it fair to believe, sir, Revlimid is going to have a kind of improved contribution in the next FY25?
Yes.
Okay. And regards the business diversification, see, in fact, now having seen a kind of a sequential progress and improvising our positioning, presence, growth, all that in the domestic side, which now, along with the consumer account, almost 40% and US more than 45%. So these are two growth drivers in the recent past, but going ahead for your future progression and all that, are you really thinking about either business diversification in terms of geographically or you think that, okay, you can enhance the depth of the business in the existing areas only or existing market only, and hence can possibly think about